Welcome to Iraqi Dinar Hub. A massive yet frequently underestimated financial development is quietly accelerating beneath the global marketplace. This rising momentum is not limited to fringe speculation or casual rumor mills. Instead, the driving force now comes from elite private investor circles, advanced financial intelligence networks, and high-level currency analysts. The collective focus has centered on the Vietnamese dong, a currency historically brushed aside as insignificant, now regarded by many informed insiders as the leading contender for a major valuation shift in this decade. The dong discussion is no longer fueled by unfounded belief. It is supported by observable economic growth within Vietnam, shifts in international policy structures, and confirmed statements from senior banking executives. With access to selective interbank briefings, the perception of dong holders has completely evolved. No longer dismissed as fringe speculators, many are preparing with authentic seriousness for what they believe may be a transformative financial event. As expectations intensify approaching mid-2025, one decisive factor now separates ordinary note holders from truly prepared investors. Merely owning physical notes is no longer the full requirement for meaningful participation. Formal registration rather than the simple act of holding currency has become the critical gateway into the regulated redemption framework. Without securing placement through the appropriate bank portals, licensed currency channels, or authenticated private pathways, many risk losing access to the structured redemption phases entirely. The central question has shifted. It is no longer only about whether a revaluation could occur, but whether you will be allowed to take part when it does. Reports indicate that initial appointment blocks for potential redemption windows are being reserved far ahead of any public notice. Private scheduling alerts continue to circulate strictly within restricted networks. Meanwhile, registration lists are being quietly assembled behind closed doors by major institutions. If you possess Vietnamese dong, Iraqi dinar, or Zimbabwe sim, understanding this evolving system is essential. Knowing where legitimate registration is open and why timing is now more urgent than ever will determine preparedness. In earlier speculative currency cycles tied to the Iraqi dinar and former Zimbabwean dollar, many believed that simply holding physical notes guaranteed immediate access to future exchanges. The assumption was simple: once a rate changed, any bank would complete the exchange at will. The regulatory reality of 2025 operates with far stricter digital oversight. Today's financial system, particularly within the United States, is governed by intense anti-money laundering and know-your-client enforcement, which applies directly to any major foreign currency redemption. According to information shared by former consultants affiliated with Citibank, HSBC, and other major U.S. institutions, early registration is now a mandatory element. It is not for convenience. It exists to ensure regulatory compliance, trace transaction origins, and that participants long before funds are exchanged. This shift is fundamentally about institutional protection and liability. Additionally, rumored early redemption windows associated with Treasury-linked senders appear to be limited to individuals already verified and documented within official systems. Holding currency alone is no longer adequate to secure premium rates or early appointment access. Without completed registration, an investor risks being placed in the lowest priority or forced into the general public phase, where outcomes are expected to be far less favorable. The developing redemption framework is tiered, compliance-driven, and thoroughly documented. The reality is straightforward: without registration, priority access will not be granted. Vietnam's economic trajectory moving toward 2025 reflects one of the strongest phases in its modern economic history. Years of stable leadership, powerful export-driven policy, and carefully managed monetary planning have produced significant long-term progress. Analysts from respected institutions including Deutsche Bank and the Global Currency Institute have publicly noted that Vietnam's strong foreign reserves, rapid GDP growth, and expanding global trade position the dong as deeply undervalued in today's market. Thomas Ketting, a leading voice in emerging markets, recently stated that Vietnam now displays every indicator of the currency approaching a major realignment, yet the conversation extends past data alone. Confidential insight suggests that IMF officials and senior Southeast Asian financial leaders have conducted multiple closed-door discussions involving financial digitalization, monetary modernization, and major potential FX recalibrations. Compelling circumstantial evidence points to certain U.S.-based banks actively modeling multiple dong valuation scenarios, set an unmistakable signal of internal readiness. Meanwhile, Vietnam's consideration of a government-backed digital currency increases the likelihood of adjustments to physical note values. These economic, political, and regulatory markers are aligning rapidly, creating a prime environment for change. For U.S.-based investors, these signals have already translated into visible behavioral shifts. Licensed currency dealers report significant increases in dong acquisition. Early redemption scheduling structures are discreetly activating. What was once dismissed as pure speculation now appears increasingly plausible and potentially close at hand. To navigate a future redemption event securely, dong holders must prioritize verified pathways that provide legally compliant access. Today's redemption system operates within a strict digital verified framework. Being entered correctly into these channels will determine whether an investor receives priority access or is left to wait during public processing. Four primary pathways dominate current discussions among analysts and compliance officers. The first involves bank portal pre-registration through major U.S. institutions such as Chase, Wells Fargo, and Bank of America. These bank-operated registration systems are never publicly advertised. They become available through secure invitations, encrypted email links, or direct contact with an established relationship manager. Access usually requires an existing high-level profile, trust accounts, business accounts, or private banking relationships. These portals are designed to verify identification, evaluate compliance, and formally position participants for advanced scheduling. Without this step, early redemption access is viewed as virtually unattainable. The second pathway involves registration through licensed currency dealers. Legitimate, federally compliant dealers are actively enrolling dong holders into secure documentation and alert systems. Clients must provide identification, original purchase records, and precise currency details for logging. These dealers maintain essential compliance files that banks will require later. Choosing a reputable dealer is therefore critical. Investors are strongly warned against sharing sensitive information with unverified sources, informal sellers, or suspicious online platforms, as these can create severe legal and security issues. The third pathway includes invitation-only private groups operating on platforms such as Telegram, WhatsApp, and encrypted email networks. While a small number may have genuine institutional access, most present substantial risk. Many group administrators make bold claims, offering exclusive portals or guaranteed codes. The strict directive remains: never share identification, banking data, or currency serials with any unverified party. Authentic high-level groups require documentation and non-disclosure agreements and are extremely limited in membership. The fourth pathway concerns U.S. government monitoring systems operated by agencies similar to Treasury, IRS, and Think. These agencies track all large foreign currency transactions through automated reporting. Any redemption above $10,000 will automatically trigger mandatory review. Completing registration through legitimate institutional channels ensures legal protection, especially for future audits. Tax planning is another major consideration. If revaluation gains fall under capital gains treatment, early preparation allows time to establish trusts, structured payouts, and professional financial strategies. Once an investor completes legitimate registration, their information is placed within a tier-based appointment system. Tier 1 includes large holders, long-term private clients, and the earliest registrants, potentially receiving fixed contract rates before market changes. Tier 2 includes mid-level participants receiving strong but slightly less exclusive access. Tier 3, the public phase, operates on standard forex rates. Confirmation notices typically outline required documents, scheduled times, and security requirements. Investors should bring all government-issued identification, organized currency, purchase receipts, and evidence of legal ownership. Redemption centers will use advanced authentication tools and enforce strict appointment windows. Preparedness will be essential. A notable element is that dong registration may also support holders of Iraqi dinar and Zimbabwe ZIM. Many banks and redemption networks are rumored to be consolidating multi-currency scheduling. Thus, registering dong may simultaneously secure access for dinar and ZIM processing. Treasury and IRS updates referencing multi-currency reporting suggest a coordinated framework may be forming. If a basket-style redemption is implemented, dong registration could function as the master access file for all three currencies. Now is the moment to assess readiness. Ensure identification is updated, purchase documents organized, bank accounts active, and currency inventories verified. Premium tiers may require signed non-disclosure agreements. High-value holders are arranging secure transport options. Some centers may prioritize individuals presenting structured financial plans or formal investment strategies. The upcoming 72-hour set or similar short windows may prove decisive. If the projected dong timeline activates, only those already verified will be able to move quickly. Others risk delays or placement into public rate categories. Holding currency without registration is comparable to owning a vault key without the code to open it. In the end, your priority position will be determined by preparation, compliance, and documentation and not by hope or assumption. Dong registration may also unlock access for dinar and ZIM redemptions. Whether your holdings are modest or extensive, the outcome may rest entirely on the steps you take right now. Secure your registration, confirm your access, and position yourself wisely before early redemption phases officially begin. We need you to pause for a moment and really focus, because what has unfolded inside Iraq over the last 72 hours has caught financial experts completely off guard, startled international investors, and shifted the entire discussion surrounding the Iraqi dinar. No one in the economic world was anticipating something this major, especially happening this fast or with this level of force. Iraq's government has officially launched one of the toughest and most far-reaching financial crackdowns in its recent history, going straight after the black market networks that have been manipulating and weakening the dinar for years. This time, their strategy isn't about speeches, gentle warnings, or empty political promises people have heard for decades. They're taking clear, visible, and immediate action, and major cities like Baghdad, Basra, and Mosul are already feeling the impact. To understand why this moment is so important, we need to break down what the government has done and why so many analysts are calling it a major turning point for the country's financial direction. Across the country, authorities have mobilized in a way that even longtime insiders didn't see coming. Before sunrise, specialized teams from Iraq's financial crime units, currency enforcement groups, and federal security agencies carried out the series of carefully coordinated operations. These weren't random inspections, they were strategic raids aimed at dozens of unlicensed currency exchange offices that have been central players in illegal dollar and dinar trading. For years, these underground operators influenced market prices behind the scenes, inflated the street rate, and caused volatility that hurt families and businesses nationwide. In the past, the government might have done small symbolic raids just to show activity, but what happened this time was a full-scale dismantling of the network. Reports confirmed this was much more than routine regulation. Offices were immediately closed, large sums of cash were confiscated, documents were taken for investigation, and several individuals were detained as part of ongoing criminal inquiries. What sets this operation apart from anything Iraq has attempted before isn't just the size of the task force, it's the timing. These actions came right after internal audits revealed that currency manipulation was far more widespread and harmful than officials previously understood. Because of this, Iraq's leadership agreed that the period of negotiation and tolerance had come to an end. The black market has grown from a long-standing problem into a direct threat to national stability, and leaders decided that no more delays or debates were acceptable. While the raids were getting all the public attention, another major development was happening behind the scenes within Iraq's financial technology systems. The central bank introduced an advanced electronic monitoring system that tracks major currency movements in real time. For years, smugglers and illegal traders relied on hidden transfers and loopholes to funnel dollars out of the country and profit from off-record exchanges. These activities weakened the dinar, contributed to inflation, and limited the government's ability to maintain price stability. But now, with the new digital system in place, every major foreign currency transaction goes through automated checks that eliminate the secrecy these operators depended on. Analysts say this single update could dramatically change Iraq's economic landscape. Suspicious transfers are flagged instantly, unauthorized movements trigger automatic freezes, and banks that fail to follow the rules risk losing access to foreign currency auctions, to the lifeline of the banking system. Transparency has been the missing ingredient in Iraq's financial recovery, and the government's investment in real-time monitoring shows a shift from reacting to problems to preventing them. One of the biggest issues Iraq has battled for years is the large gaps between the official exchange rate and the street rate. The black market took advantage of shortages, misinformation, and public uncertainty to push the street price much higher, which caused the cost of everyday goods of food, medicine, imported items to skyrocket, hurting families across the country. But now, because of the recent enforcement push, something unexpected is happening. Early reports show that the street rate is slowly moving closer to the official rate as illegal operations are disrupted. This narrowing gap is a strong indication that the government's actions are having real effects. Once illegal operators are shut down and their influence is removed, the artificial inflation they created begins to collapse. If this pattern continues, Iraq could see the closest alignment between rates it has had in years, which is essential for long-term growth, stability, and any future currency reform. Without the rates aligning, the economic system remains fractured. With alignment, clarity begins to return. People are now asking why Iraq chose this moment to roll out such an aggressive and coordinated campaign. The answer lies in a broader plan financial leaders have been developing for months. These crackdowns aren't random events, they're a key part of a long-term strategy to rebuild trust in the dinar and reduce the country's dependence on the US dollar. Iraq's economy has been dollar-dominated for decades, partly because of instability and partly because people simply trusted the dollar more than the dinar. But officials now understand that Iraq cannot grow unless its own currency becomes strong and reliable. Their de-dollarization plan involves clamping down on the black market, tightening regulations, encouraging dinar-based transactions, and reducing the use of foreign currency for everyday business. Real stability can't be declared with words up. It has to be built through consistent action. One of the biggest changes happening now is the push to make the dinar the main currency used for contracts, daily purchases, government payments, and business operations. Officials are introducing incentives like lower fees, easier digital banking processes, and benefits for companies that choose to price their goods and services in dinar. This shift is crucial because a currency grows stronger when people use it regularly. Countries that successfully strengthen their economies start by increasing reliance on their own money. As more transactions happen in dinar, the black market loses power because there's less demand for illegal dollars. This marks a structural shift that could reshape Iraq's financial system. When people save, spend, and trust the dinar, its value becomes supported by the country's own economic activity rather than speculation. Another major part of the government's plan is stopping the flow of dollars leaving Iraq illegally. For years, smugglers used shadow networks, fake invoices, and shell companies to move large amounts of money out of the country, weakening Iraq's financial reserves and making stability much harder to maintain. Now the government has introduced tougher border checks, new inspection procedures, and advanced scanning tools to detect undeclared cash. These changes create real barriers to smuggling. Initial reports show that several attempts have already been stopped before funds could leave Iraq. By keeping dollars inside the formal banking system, the government strengthens its reserves and improves overall confidence. A central bank with strong reserves is better equipped to support the value of the dinar and handle economic challenges. Inside Iraq, the public reaction has shifted noticeably over the last few days. Many citizens were uncertain at first, assuming the government would fall back into old patterns of weak enforcement and empty statements. But this time, people are seeing real results. Prices in markets are stabilizing, and traders who once refused to accept dinar payments are now switching back to the national currency as illegal dollars become harder to get. Small businesses, which have struggled under unpredictable exchange rates, are starting to feel a sense of relief. Banks are reporting an increase in dinar deposits, which shows that people are regaining confidence in their currency. Trust is the foundation of any strong economy, and when people believe in their money, liquidity increases and value grows naturally. These changes prove that the reforms are working in real life and not just on paper. Naturally, people want to know what this means for the dinar's future value and whether it brings Iraq closer to a rate change. While no official announcements have been made, one truth is clear. None of those discussions can happen until the black market is under control. A currency cannot show true strength while illegal trading networks distort prices. By taking charge of the market, the government is removing the biggest obstacle to any future reform. Stability is the runway for major changes, and nothing can move forward without it. The more the government succeeds in cleaning up the market, the more realistic long-term currency strengthening becomes. But progress won't be perfect. The black market will fight back, raising prices, spreading rumors, or moving underground. This is expected whenever long-standing financial networks feel threatened. The difference now is that enforcement appears stronger, more coordinated, and backed by top leadership. Looking ahead, Iraq is preparing the next phase of its stability plan, which includes major updates to its digital dinar systems. This could include expanded electronic payments, mobile banking, digital wallets, and modern financial platforms designed to reduce the country's reliance on physical cash. Digital financial systems make it easier for governments to track transactions, reduce illegal activity, and strengthen financial transparency. For Iraq, going digital is not only modernization, it's protection. As digital payments become more common, illegal traders lose the anonymous, cash-heavy environment they depend on. This shift could make the dinar easier to manage and more trustworthy for the public. On the international stage, Iraq's recent moves are attracting attention. Investors and global analysts are watching closely to see how these changes affect the country's economic future. Stability attracts investors, predictability attracts businesses, and transparency attracts partnerships. If Iraq proves it can maintain tight control over its currency, it could spark economic growth that wasn't possible before. Some international companies that previously avoided Iraq due to currency instability are now reconsidering their stance. As confidence grows, the potential for major development projects and foreign investment increases, which all support the dinar's value. These reforms go beyond financial systems; they influence national confidence. A stable currency strengthens people's trust in their institutions and fosters unity. When citizens feel secure financially, they're more optimistic and cooperative. Iraq's past has been filled with instability and corruption, but this moment shows that meaningful progress is possible when leadership stays focused and aligned. Stability creates opportunity, and opportunity leads to growth. As the campaign continues, the government plans to release regular updates showing measurable progress. These updates might include exchange rate trends, digital banking adoption, smuggling prevention statistics, and inflation reports. Transparency helps build trust, and the more information the public receives, the more confidence grows. Beyond Iraq's borders, neighboring regions are watching closely. Smugglers and illegal traders in surrounding countries have relied on Iraq as a source of unregulated cash. By tightening controls, Iraq disrupts these networks and strengthens regional financial stability. A stronger dinar contributes to a more stable Middle East, and this ripple effect could provide long-term benefits for the entire region. From a geopolitical standpoint, Financial stability increases Iraq's influence in global markets and international negotiations. As the country reduces corruption and enforces regulations more effectively, it becomes a more reliable partner for trade and investment. A strong, stable dinar supports Iraq's ability to negotiate better terms and build stronger relationships worldwide. Inside the banking system, reforms are raising accountability. Banks that previously operated casually under loose regulations are now expected to follow strict reporting rules. This reduces risks like fraud, unauthorized transactions, and internal misconduct. Strong banking systems support strong currencies, and Iraq's push for modernization signals a step toward long-term economic maturity. These improvements also encourage banks to enhance their technology and serve customers more effectively. For everyday citizens, the reforms offer meaningful relief. Unstable exchange rates once caused sudden spikes in prices for essential goods of fuel, food, medicine, which placed heavy strain on families. But as the black market weakens and the street rate moves closer to the official rate, prices are settling. This creates more stable living conditions and reduces stress for millions of people. A dependable dinar means a more dependable life. All of these changes lead to a bigger question: is this the moment that transforms the dinar's future? Many analysts believe this is the most serious financial clean-up Iraq has ever taken on. If the country can maintain this momentum, it may remove long-standing barriers that have limited the dinar's potential. While no one can predict exact timelines, one thing is certain: stability is the first step toward strength, and strength is the first step toward future growth. Iraq is building that foundation right now. This moment is a reminder of how far things have come. For years, people doubted whether Iraq could fix its financial issues. But today, we're seeing real progress, actions that many people once thought were impossible. This marks a turning point not just for the currency, but for the country as a whole. And here at Iraqi Dinar Hub, we'll continue tracking every new development as this historic shift continues.